Welcome back, guys. It's Jason with your Hopium Free Crypto channel. Today I've got a special guest with me, Matt from Invictus Capital. How you doing, mate?
Hey, Jason. Great to be here again. Good on yourself.
Excellent. So we get the guys from Invictus Capital to come on every month or so because we want to get an update from the hedge funds and what the institutions are doing, and then of course see how Invictus Capital has been progressing throughout this bull market and of course the bear markets, which we know they've done pretty well with. So we just want to get an insight today, get an understanding of what's coming up, and some of the stuff that we're going to chat about today are Matt debated a Bitcoin bear during a crypto conference recently. So we want to learn, what Matt has found out from that experience and what he can share with us as crypto investors. And that's going to lead on to some stuff around sort of 3 altcoins with the biggest potential and to understand it from a fundamental point of view. And a couple of other things are major fundamental news, and especially to do with institutions driving this Bitcoin adoption. And of course, we'll check on ICAP as well. So before we get too far into the guts of the video, Matt, just as we do each video, a brief run through Invictus Capital, what it is, why retail are interested.
Perfect. So Invictus Capital really started in 2017, where we launched our first fund, which was just the top 20 crypto 20 index fund that allowed someone to gain kind of simple, stress-free exposure to the crypto markets. That fund did really well, and we've since kind of seen ourselves as asset managers, and now more recently kind of a crypto firm. That the primary differentiator for us is that we're builders in the space. We create our funds using blockchain tech. All of our funds are tokenized, and we've got 5 or 6 funds in total now. Everything from VC to lending to pure crypto exposure. And we've also recently started a trading division, which generates a lot of alpha. We can take on crypto loans as well. So really a fully fledged kind of crypto business at the moment. A more recent push for ours is that of regulation, which has been a theme for quite a while now. And so we're really kind of excited about this next phase, and have been growing pretty massively, around 60 staff at the moment at Invictus since when we started. So I was one of the founders of Invictus, and my current role is head of product. So I work very closely with the engineering team, and we define what the feature roadmap will look like, what kind of we're going to develop on the platform, building out an app, things like that.
So I guess that can take us into the new developments for this last quarter. We briefly spoke about the Vault product.
The Vault product's really interesting, and it's the alpha division of the alpha division of Invictus Capital, where we specifically do trading activities. And it's very similar to an offering like Celsius or Nexo or BlockFi, whereby we can take on loans as Invictus Alpha and use that for our market neutral trading strategies. A big differentiator for us is that we're completely vertically integrated. So we're not kind of an aggregator like Celsius, and we can tell you exactly where crypto is being deployed. So we can offer very competitive rates as well, up to 12% on USD stable coins for use in our trading strategies, which again are very market neutral. So we've seen huge interest in that. To comment a bit on what else has been happening, we've just had our first exit from the Hyperion funds portfolio, which was roughly a 70x or 80x on the original investment, which is amazing in the 2 or 3 years that fund has been running. And additionally, ICAP we've been seeing do super well, in large part due to the increased fee revenue we've seen across our broad range of funds. So I'll explain what Hyperion is. So Hyperion is a tokenized venture capital fund, which we launched in 2018. And this fund originally started with $11 million that the investors contributed to the fund, same as how a mutual fund would be. The key difference is that it's closed-ended, and unlike our crypto funds, it invests in equity in startups, right? So one of the startups we invested in is a company called OVEX, which is a South African crypto exchange, and we've recently exited that position, which is a really big thing for VC funds. Normally, it takes a number of years and a lot of hard work to exit profitably a startup investment. So this is the first major exit of the fund, which provides the fund with a lot of liquidity for useful buy and burns, right? And a buy and burn is how investors gain value from the fund. Other than the underlying increasing in value, we essentially buy tokens off the open market and burn it, similar to a share buyback. So we recently did a buy and burn for $500,000, and we've got another $500,000, but more than that lined up for future kind of share buybacks, which is massive in a fund that started out with $10 million, $11 million. It's a really great success, and huge credit to the Invictus Hyperion team.
So you said it was about 70-80x, which means the 10 million went to about how much?
Well, 70-80x on that particular investment. So it's a diversified allocation. Other investments of ours are trading platforms like Quantfury or Syntropy or Noya. So OVEX was just one allocation, which resulted in a huge kind of increase in liquidity in the fund. So because it's closed-ended, you can only buy the fund tokens on the secondary market. All of our other funds are open-ended though, so you can invest directly on our platform.
And people want to know more about that. I'll leave the links in the description to Invictus Capital, and basically it's on their website, and you can go through and find those. And they're talking all the time on, I believe you have Twitter. Is it your Discord or is it Telegram?
Yeah, Twitter, Discord's a really big one. We also have a Telegram community. I recommend Discord as a starting place. It's a very active community.
And do you have the details up there about the index fund, how you went this quarter?
Yeah, so the index funds, we've got 2 crypto index funds. One is called Crypto 20, which is the first fund we started. And it's top 20 crypto assets, which are capped and rebalanced weekly. So the benchmark for that would be a completely unweighted index. And that fund has done a lot better than the benchmark. So it's a really good way to get exposure to the general crypto market. Over the past quarter, it was around almost 40% increase in value compared to equally weighted top 20. So it kind of just proves that the rebalancing capping aspect is not only does it give you a better risk-adjusted return, but in this case for the past quarter, a better outright return. But the idea of having an index fund is that you just really capture the overall market. That's the goal. We're not trying to place bets on particular altcoins or crypto assets. So as the crypto market goes up, you'll expect your investment in the fund to go up.
And the idea there is that you continue to rebalance on a weekly basis so that you're always keeping up to date with whichever cryptocurrencies are falling out and coming into.
Exactly. Yeah, it's exactly like the S&P 500, but for the crypto market. So indexing is a super great way to gain exposure kind of passively to crypto assets. It's a good gateway entry point for someone looking to invest in the crypto market for the long term.
So it takes the risk out because you don't have to watch the markets all the time and then know which ones are coming in and out and buying and selling and holding.
Exactly.
The one question that came up from viewers last time we talked about that was what happens if Invictus goes down? And so we tried to discuss how people can get their funds back, because you could just buy Ethereum and store it yourself. Obviously, you're taking on that risk. But if you invest in Invictus Capital or in one of the ICAP products or the hedge fund, the C20 or the C10, if something happens to Invictus, there is a way to get your funds back.
And kind of the way that the products are structured is that they're traditional mutual funds, right? So a mutual fund is a concept that's existed for hundreds of years in traditional finance. And essentially core to that concept is that the funds themselves or the assets that are grouped in a particular fund are completely separate from the company that's managing those funds. So in that case, right, you've got all the kind of legal surety you would have in a traditional mutual fund, whereas if your asset manager or the person, say, performing trades in a particular fund or managing the strategy, if they, for whatever reason, it's got a business, it's got zero impact on the underlying actual assets of funds, that's a separate company.
So say it was Vanguard as an example. I think most people would know what Vanguard is, one of the biggest ones.
Correct,
and they might hold like 3 stocks, just for an example. They hold Apple, they hold Tesla, and they hold Facebook. If something happened to Vanguard and they went bankrupt, you would still own those shares somehow?
Exactly. Yeah. So the way that it works is you've got the actual fund itself, and then you've got the asset manager, Vanguard in this case. So the fund would be, say, an S&P 500 tracking fund, and Vanguard would be the asset manager. If for whatever reason Vanguard was insolvent or they stopped operating, the fund is completely unaffected. It's a separate legal entity. It's a separate structure. And that's to kind of add to that,
C20 and C10.
Exactly, they're mutual funds. The only unique aspect there are a few unique aspects, but a very interesting aspect for us is that we use blockchain tech to keep track of who owns what. So the share register, essentially, units of the fund are kept track on the Ethereum smart contracts, and that increases transparency even further. But that same structure exists, and we're still going through this kind of regulatory process and have started appointing administrators and auditors to have even further oversight to kind of increase that trust building with the way that we structure our funds.
All right, that makes a bit more sense now. I think to be able to relate that to something that's already existing, to me, makes more sense. I hope to the viewers also it makes sense that people were concerned that if they're investing into Invictus Capital or one of these ICAP products or C20, C10, if something happened to you guys, then it's all gone. That's kind of what we know about with putting money into Celsius or into BlockFi. If something happens to them, sure, they have insurance, but the money's kind of gone, is my understanding. I could be wrong. Yeah,
it depends. Like it's all about the kind of structuring and legal kind of entities that exist. So we're at Invictus very consciously walking the ground between the pure DeFi world with things like MakerDAO and all sorts of DEXs versus the traditional world, which is generally quite slow and opaque. So we kind of have the structure of traditional investment products and the surety and like assurances or oversight that comes with that, but we're using the new blockchain technology to do this because we think that's really the future of finance. So in walking this middle ground, I think we've got a very good balance, between the completely alternative DeFi world, where there's a lot of technology risk, versus the traditional world where it's very slow, but there's a lot of security and oversight and legal structure.
That makes a hell of a lot of sense. I think moving on from that, which is a nice segue, looking ahead to 2022, regulations shaping the crypto space. And I think that leads on nicely as well to mix into that with, say, some sort of proof that institutions are driving this next stage of the Bitcoin bull. So what are we seeing moving ahead? And, there's a lot of talk about institutions. Is that what we're seeing moving ahead? Is that is it actually institutions that are driving this Bitcoin bull market?
Yeah, I absolutely think so. And I think that they will be kind of instrumental in just increasing the adoption of crypto allocation. So it becomes a self-fulfilling cycle as well, right? As soon as institutions start gaining more exposure, it becomes more okay for institutions to start gaining exposure. And so it increases like that. And the big part of
seeing from your business as well? Like, are they investing? Do you have family offices, or do you just have institutions investing in your products?
So I'd say it's still very early stages for that. And to answer your question, and I'll illustrate that point more, I think there are three primary reasons why we think that institutions are going to be that kind of next phase of crypto adoption, or why they're super interested more so than they were, previously in past years. The first is the fact that, and this is my 3 points. The first point of those is that financial service providers, as well as regulators, are super interested in the crypto space, and largely from a very positive perspective in our view. So auditors, all sorts of consulting companies, huge banks are very actively interested in crypto assets, and that's the first point, that the regulation is catching up, and that's kind of a sign that institutions are going to be interested in the near future. Otherwise, these service providers wouldn't be interested in catching up, right? The second is that firms like Goldman Sachs or JP Morgan are actively allowing their clients to invest in crypto, which is a big shift from the stance that they had previously, even as early as 1 year ago. And even companies like Tesla or Square actually using some of their balance sheet to allocate to crypto assets is making it more mainstream. And I think it's the beginning of the financial sector becoming far more interested. So there are already big firms that have actively taken a stance that they're okay with crypto assets, or have actively invested in crypto assets themselves. And again, I think this is very early on, but that's a really good indicator that institutions will be interested. And the third is, from our perspective as Invictus, we've got a lot of our people we work with, a lot of the staff at Invictus are from traditional finance, huge banks, asset managers, and a lot of the executives and a lot of the people who are very much still in the traditional world are super interested in crypto. And as another anecdote to that, I was recently at the Alternative Investment Summit in Dubai this past week, and it's a 2-day summit all about alternative investments. So it's everything from renewable energy to gold to property to crypto. And one of those 2 days, so 50% of the conference was focused specifically on crypto. And the attendees of that event are family offices, very traditional asset managers, people who don't necessarily know that much. But the interest is certainly there, and we're seeing that ourselves directly as Invictus. And you see it in these kind of events, as I just highlighted, where very traditional players are actively taking an interest and looking at an allocation in the crypto space.
Massive. Okay, so looking at the third point first, it makes sense that they're on board. Like, you're seeing them come through, and then it just takes that time to go through the steps to be investing into it. So could this bull run continue on longer than we expect, or are you guys thinking some cycles will continue to play out that we've seen in the past?
Look, I think the cyclical nature of markets will always exist, irrespective of who the players are. I think in the crypto space, it's volatility often is obviously like far more prevalent, right? And I think that's just because the market cap is quite small. It doesn't take that much interest one way or the other to move the market quite significantly. So it's worth just pointing that out at the get-go, that volatility is very much a part of the crypto markets for now, at least, because it's small. But the upside potential, I think, is far huger, or you get kind of compensated risk reward for that volatility. So I wouldn't rule out any kind of cyclical nature of markets. I think that'll definitely happen, irrespective of what kind of institutional interest is. But I do think it's a really good kind of asymmetric bet in the crypto markets, that institutional interest will further bolster asset prices. And certainly that's our opinion, that institutional interest is coming. It's very hard to say when exactly. It could be 6 months, could be a year from now. But I think the end result of institutional interest in the crypto markets is only going to be good for anybody who's currently got an asset allocation in crypto.
All right. So by the sounds of it, it's still not too late to invest into cryptocurrency. There's still a pretty decent upside. upside compared to the downside. So that's the asymmetric risk.
Yeah.
And there will always be cycles. So this idea of a
Absolutely right.
super cycle that it just keeps going up
Yeah.
and up and up and up is probably, we think, not likely.
Yeah, I would say so, and that's just the nature of all markets, right? And it's important to note, like, so two things. One's kind of a funny saying, right? Like the best time to invest in crypto or Bitcoin, was 2012. The second best time is now, and I do think that really holds true if you look at the overall market cap and the potential of these crypto assets. The second thing is just that this is obviously not investment advice, but nobody should be going all in on crypto, right? It should form part of a greater allocation, portfolio allocation. So the pitch to institution is really a simple one. It's like, look, if you allocate 1 or 5% of your balance sheet or of your portfolio to crypto, you get a far better risk return ratio, right? Worst case, you lose a few percentage points. Best case, you can make multiples of whatever that allocation is. So I think that kind of thesis really makes a lot of sense, and is what would be applicable for any new asset class.
Are you having those conversations with family offices and institutions now with Invictus Capital?
Yeah, so we've engaged quite a lot with institutions, everything from bank executives interested in learning about blockchain technology to family offices or hedge funds looking to do an allocation or have interest in the crypto space. And again, we're really trying to walk that middle ground between traditional finance and this new blockchain world, right? And I think that the end result will be that of adoption. The sales cycles for institutional investments is just a lot longer, and the regulation is always a prerequisite, right? Which is why it's very important for us to be in a structure that makes sense and to have kind of legal oversight that really assures institutions. And I think that's for the benefit of everybody.
Beautiful. All right, I reckon that's a good place to get into your, let's call it top 3 altcoins. Now that we've gone through the institutions, the market's going to continue up. We'll have cycles, but altcoins, this is a nice fun one. We were chatting just before, 3 altcoins with the biggest potential, reasons why, stuff maybe we've missed as retail investors. Like, what aren't we seeing?
Yeah, so I think the first thing that comes to mind, and it really plays off the fact that most people only really are interested in Bitcoin, or Bitcoin is always the gateway to the crypto space. And so I'm very much a huge fan of crypto assets such as Ethereum or Matic. And those would be, and those are very popular kind of altcoins to call them that. But I think the potential of smart contract enabled blockchains and the kind of the huge development that's possible on them is really difficult to underestimate, right? I think it's very similar to kind of the internet in the early 2000s. It was very hard to say what would be built upon it. And we're starting to see huge traction in that space with Ethereum and Polygon specifically being used for really kind of profound, interesting financial products or exchanges or games, whatever you like. And I only think that adoption is going to further increase. So I'm a big fan of smart contract platforms, and ETH and Matic, which is for Polygon, I think are 2 really good examples.
Are you seeing institutions have interest in that as well after they've looked at Bitcoin?
I don't think so yet.
Okay.
Yeah, I think most people are still primarily thinking about Bitcoin as the kind of primary thing to understand. And I think that's part of why I'm a big fan of Ethereum and Polygon, because they're a little bit under the radar when it comes to institutional investment, despite them being so high up in the market cap. Just to give a third example or fourth example, it's a bit of a self-plug. I think coins like ICAP, which is the Invictus Capital Community Token, and tokens or kind of crypto assets that are similar in nature to that are also very interesting. To explain how that works for us, our community token is essentially a reward token that you can buy off the open market, or you can stake your funds and get access to this token. And it essentially, we use a percentage of revenue from Invictus to buy and burn those tokens off the market. So if you think that Invictus, as an example, is going to be very successful in the future, will be $1 billion company in the future, and buying ICAP makes sense. And there are quite a few tokens similar to that. Uni is a good example for Uniswap, and quite a few exchanges also have their own kind of tokens that have a similar kind of aspect. And it's really a discounted future cash flow model. It's very easy to understand for people from traditional finance. And you can look at those kind of crypto assets that would be deemed altcoins, I guess, to use that terminology. And you can look at the underlying company behind them and see if you like that company and make a bet or invest in that for upside. I think not very many people are looking at that just yet.
All right. And what about one more, just as a stab in the dark, something outside the top 100? Do you look at anything there?
I don't personally look that far down from the top 100. my main interest is that of kind of a technologist, right? And it really matters what people are adopting to be using. I can't say offhand what what would be a good
I was trying to find
asymmetric
something
bet.
for the thumbnail or the title to say hedge fund manager gives us 100x altcoin gem, but I don't think
I
we'll
can
get
ask
there.
our trading team will have far more insight than I with respect to that, and I'll ask our head of trading what is his shot in the dark top one over the top 100 altcoins.
Sounds good. We'll leave that for the next catch up that we do. Any last words?
Yeah, I think that the crypto space is only ever getting more interesting, right? And through the cycles we've had up until this point, there was really the crypto winter tested a lot of firms, and weeded out a lot of projects. And people were concerned as to whether or not crypto would be here to stay for the foreseeable future, just because of how kind of how dark that time was, so to say.
I definitely felt that. That was crazy.
Yeah, from
2018, 2019. Yeah.
From where we're sitting now, crypto is absolutely here to stay. The interest from both institutions as well as kind of traditional finance companies is renewed to a far greater level. So we're very confident that the crypto markets are going to be here to stay. And if you look just at the developments that have taken place over the past year, it's not slowed down. Interest has only increased, and the type of opportunities available is only increasing as well. So I really recommend to anybody interested in assets or in finance, just learn about the crypto space. Our Discord is a great place to do that. And I just think that this is such an exciting place to be. Yeah.
Check out the links below for Invictus Capital, and there'll be the Discord, the Twitter, and the website if you're interested to learn more about Invictus Capital or the ICAP tokens and what you guys do over there. Thanks again for your time, mate. Really appreciate it, and look forward to chatting with you again soon.
Awesome. Likewise.